Hello, contrarian capitalists. Hope you're doing well. It's going to be a delayed start to this video purely because when I recorded last week, everything got cut off by Substack. So I'm just going to take it a bit slow in the introduction on purpose. Like I say, last week took about a minute or so. There was a bit of a cut off on the video. So thank you for joining. It is 5:37 here in the afternoon in the UK, which means it's going to be just gone half past 12 in the afternoon if you're on East Coast time over there in the USA. And we will, of course, go through our usual array of commodities and equities and check in on any other information of note. You'll see from the headline that metals are rising. I'm not going to say surging because that's a bit too hyperbole, but metals are on the rise. I've also seen that the odds of a rate hike from the Fed have taken a hit. That is because CPI data came out today. We'll go through that. As you'll see, my eyes gaze to the side, so I will be referring to a Zero Hedge article. I'll link that article in the post that comes with this video as well. But before we get to that, let's go through commodities first. So we have gold. Gold is trading at $4,414. It's up $73 on the week, so it's up 1.69%. Silver, silver up on the week. It's trading at $65.41. It's up $1.94, up 3.07% on the week. Look at platinum, also up on the week. $31 up on the week, up 1.81%, trading at $1,765. Again, just on the weekly chart, it's formed a nice U curve, as I like to call it. So, yes, certainly trending in an upward direction. Palladium actually down on the week, down $9.81, trading at 1,369. The copper, because everyone's keeping an eye on copper, it's up at $6.63. That's per pound USD. So that's up 4 cents on the week. Had reached 6.86 last week, but it's cooled off a little bit since then. With copper, just a side note on that, there's a lot of really good things at play in copper. We know that if you look at the weekly chart, it's on course for 4 green candles in a row. The red candle that it did have at the start or in the middle of July pretty much has now indicated a sideways movement. Before that, there were 2 green candles to the upside. So of all metals out there, copper, I would argue, is doing the best, leading the way to an extent. If you look at the weekly charts in comparison to, say, platinum, silver, and of course gold. But as we've covered before, and I'll link to again, whether you're looking at gold, whether you're looking at silver, whether you're looking at platinum, whether you're looking at copper, the supply and demand dynamics are the same, i.e. demand for these commodities is significantly higher than that of supply. The commodity that we do look at that has the opposite effect is palladium. So with palladium, there is a surplus forecast between 2026 and 2030. The thing you have with palladium, which is why I'm bullish on it moving forwards, is quite simply that palladium has interchangeability with platinum. So if platinum gets too expensive and you need platinum and or palladium for catalytic converters, for example, if platinum gets too expensive, car manufacturers are likely to then look in the other direction. They'll likely look at platinum's brother, palladium, and then go in and buy palladium. So that's the one reason I'm bullish palladium moving forward. But in terms of its forecasted supply and demand, it is actually forecast to have a structural surplus in the next few years. So we'll see what happens with that. But looking through the weekly charts, again, everything's pretty much on the rise. That exception at the time of recording is palladium. A multitude of reasons as to why this is the case. These were covered in the commodity wrap at last weekend. Onto oil. Oil is up on the week. So I've got a WTI here. It's at $83.04, up $5.97 on the week. That's up 7.75%. If we look at the Brent cash market, it's currently sitting at $91.36, up $5.93 on the week. So that's up $6. Up 6.9%. Have a quick look. Not something we would normally look at, but I'll have a look at RBOB gasoline. That's what RBOB gasoline is currently sat at $3.13. That's up 15 cents on the week. It's up 5.1%. I look at natural gas spot price using the Pepperstone chart. That is up on the week as well. It's up 12 cents. Currently sat at $2.81. That's up 4.61%. And if we look at the Dutch TTF natural gas futures, they're up on the week quite sharpish as well. They're sitting at €60 and 49 cents, up €4 95 cents on the week, about 8.91%. I think with oil again, it's almost, dare I say, it gets boring to say the same thing week in, week out. But what I see with oil is that there's a lot of disruption, of course, on a daily basis. A lot of it is headline driven. As I pointed out many times before, any bomb, any closure, any tweet, any true social post, anything like that will inevitably move the oil market. That's just how it's working at the moment. I know a lot of people are getting annoyed by that. But welcome to silver's world. If you're trying to trade paper silver, good luck. Same if you're trying to trade paper oil at the moment, good luck. It's very volatile out there. In terms of taking the longer term point of view, I agree with people like Patrick Kareem, Tom Bradshaw, and others out there as well, that oil moving forward, so you're talking 5-10 years down the line, it's likely going to be very easy triple digits, maybe $200-300 without a shadow of a doubt. Obviously, don't take that as financial advice. It's just my opinion. But I do believe that, again, there's overall supply and demand dynamics there that we need to take into consideration. Let's have a look at WTI. And again, my eyes will go to the side because I'm looking at a Zero Hedge article as well. So despite us just saying that WTI is actually up on the week, it has had a bit of a dip today. Reason for that, OPEC again has cut its forecast for global oil demand growth this year. In terms of the API report, there's been a huge inventory build, crude up 9.1 million barrels. The DOE reporting an increase of crude of 17.4 million, although that's below expectations by 1.4 million. Apparently, that's the biggest build since January 2023. If you're looking at Cushing, again, it looks like it's coming off of tank bottoms. It's up 1.61 million barrels. So a lot of that going on. And again, I find oil very difficult by far. And I'm not an oil expert, and I keep pointing it out to people. I'm not an oil expert. I'm not a gas expert, but I do try and educate myself as and when I can to get a much better understanding. So I can, what I like to do is take a complicated subject. I like to learn it, try and put it into layman's terms in my head, and then I can use those layman's terms to pass on to you. And of course, I appreciate that some of you listening are going to be in a similar boat to myself, where you might not know a lot about oil. I appreciate there's going to be some people that listening to this that know an awful lot about oil as well. And I never like to go around and BS people, especially if I'm humble enough to admit if I don't know something, I'll tell you, and I try not to bumble my way around a subject because you just come worse off if you try and do that. Anyway, point being on oil, again, it's going to move a lot moving forwards. I think we could argue that's going to be the same with most commodities. And again, if you're trying to trade it, then good luck with that. In terms of the longer term, I'm in the camp where I believe that demand is going to be much higher than supply. The big caveat I see to all of this is if there is a bigger economic recession, which I'm not saying is imminent. Some people are saying that Q3 of this year, the proverbial could hit the fan. Other people saying it could happen next year. What I would say is if we get to a stage where the house of cards collapses, which is possible, then we're not just going to see equities fall down. You're going to see gold fall down, silver fall down. Everything's going to you know, go down basically. Unless you've got an inverse ETF, then that'll probably go the other way. But point being that in a big broad sell-off, if you're caught the wrong side of a trade, for example, then what you're going to do, you're going to look to sell off what you can. The family silver, as they say. In that case, that might actually be silver, but it might be gold. And again, selling becomes selling, and off you go. You're down on a downward spiral. Now, if that were to happen, that would take time. You'd then have to watch out for a possible deflationary event, of course. But looking further ahead, what I would envisage if the people that are just listening to the podcast, I'll try and explain this. If we're at the top and we get a big economic, collapse, you're going to have a big, massive drop to the downside. You're either going to do a U-turn or you're going to have a V-shaped recovery. Obviously, I don't know until it happens. But basically, when then you go to the upside, I think you're then looking at higher highs, basically. And I think this is where people say that you're going to get, possibly 4-digit silver, as I've heard Michael Oliver say recently on Jesse Day's show. I would not rule it out. I know a lot of people might think that Michael Oliver's a bit crazy for saying that, but he puts his neck on the line, and fair play to him. Whether I agree with that, I don't know. I've not done enough analysis to come to that conclusion. But he puts his neck on the line for it, and fair play to him for doing that. Admittedly, he did say $300 was possible target for this summer. That hasn't happened, unlikely to happen. But could $1,000 happen by the end of this year? Maybe. It's very unlikely, but never say never. Could that be the case by the end of next year? Again, unlikely in my opinion, but never say never. If it does, even I might be cashing out if it gets to $1,000 silver for sure. But let's see what happens in terms of that. But the structural things at play, or supply and demand, very, very strong for most of the commodities. Just before we go over to equities, I should just point out the GDXJ should have looked at that as well. That's up mildly on the week. It's currently sitting at $118.80. That's up $1.18 on the week. So 1% basically. And the SIL again sat at $90.97. That is up $2.47 on the week, up $2.79. I know that Don DeVette was on the show last week, and the overarching point, he believes that there's 3 legs up. And we're in the first leg, according to him. Then you might get a drop down. Then you get leg 2. Then you get a drop down. Then you get leg 3. Leg 3 being the very frothy part of the equation. So again, don't take this as financial advice. What I would say is if you don't have exposure to mining stocks, start doing your homework, start having a look at them. Because again, if you pick the right company, chances are you're going to be sat here in 5 years' time and you're going to be more than likely in a better position than you are now in terms of returns and so forth. Again, I have to be careful and wishy-washy with my language, just in case people are watching and just heed my advice. Again, it's not financial advice. If you don't have exposure to the miners, I'd go and do some homework. If you do have exposure to the miners, again, what I would recommend is that you follow Don DeVette on Substack, Don's newsletter. You can also follow him on X as well. He does give out a lot of really good information for free. I will add to that. So do go and follow him. Moving over to equities, we have the S&P 500 at 7,753. It's actually down 4 points on the week. We've got the NASDAQ is at 29,803. It's up 81 points on the week. We've got Dow Jones is trading at 53,834. It's down 208 points on the week. The VIX index, again, VIX measures the volatility. of the S&P 500. That is down on the week. That's trading. That is sat at 1476. Dollar index. Green candle on the week so far. It is at 99.95. So it's up 0.352 on the week thus far. Head over to our friends in Asia. Look at the Kospi. If I could bring the chart up, that would be useful. Kospi is up on the week. It's at 6,579. So up 320.27 points. So it's up 5% on the week. Interesting for the Kospi because, again, we've had a bit of a brutal sell-off. 2 weeks ago, there was a candle that went all the way down to 5,262. And as I just mentioned, we bounced back nicely because we sat at 6,579. Key question in the Kospi: has the dip been bought? Looking at what I can see with the moving averages and the fact that the 200-day moving average is ever so slightly ticking to the upside there. Yes, you could argue the dip has been bought here for the Kospi. The retail investors, South Korean retail investors, have been left with egg on their face, so to speak. And my understanding that institutional investors have come in and it looks like they bought the dip. Let's see what happens with the Kospi moving forwards, but a good week thus far. And having a look at the Nikkei as well over in Japan. That's on the march upwards as well. That is at 68,440. So it's up 2,222 points. I wonder if that's an omen. It's up 2222 on the week, 3.36%. So good news out of Asia. Probably check in very quickly with the Hang Seng. So it's over in Hong Kong there. The Hang Seng's actually down on the week. It's trading at 25,440, down 227.86 points. Right, let's go over to CPI. And again, I'm reading off this Zero Hedge article. So the CPI rose 0.1% month on month, 3.4% year on year, which is down from 3.5% in June. It's the lowest level since March of this year. Reason for that, July's ongoing decline in oil prices has had the biggest impact on that. Of course, what we have seen between prices declining in July, we've now started to see oil prices go back to the upside. So again, we could take this with a pinch of salt all day long. I know that many of you listen to this might just take this with a pinch of salt, but whether we like it or not, these news releases, this data does move the market, predominantly algo-driven market, but they do move the market nonetheless. Again, what I find here again is the fact that a lot of it is centered around July's oil price decreases. And again, as we've just mentioned, oil prices are on the way up. So it'd be interesting to see what next month's data looks like. We've got goods inflation flat at 0.8% year on year. Services inflation slowing to 3% year on year as well. And if you have a look under the hood of Zero Hedge, I've put it here, energy was the biggest deflationary driver, whilst medical care services rose the most. I'll link to this article in the post that comes with this video. Again, see what happens next month is how I would summarize that. What this has done is it has taken the odds of a rate hike. They've dropped dramatically. I don't have the poly market in front of me. I will link to that again in the post that comes with this. So have a look at that below. Is that the right thing for the Fed to do? Well, I think they're in a catch-22. They're damned if they do, damned if they don't. What we have seen with the Fed is that there's slightly more, and I'll use this term loosely, independence within the voting, within the Fed. Because you wouldn't normally get three people, want a rate hike, but they did. Three people dissented last time, so that might show a bit more independence from them. But ultimately, they're down if they do, down if they don't, and who knows what will happen moving forward. I have no idea. I absolutely have no idea. You can easily make the case here that they should rise, but again, that would affect the servicing of the debt. And then you could argue a case for them to decrease. But again, at the same time, if you do that, what does that lead to? Well, it's good for gold and good for silver and good for commodities. That'll be QE and so forth. We could argue again, though, that QE is already in place. We saw, as James Rickards and other people, even myself, have described it as yen intervention. We saw this a week or two ago that the Federal Reserve done some deal basically with Japan in the background with the Bank of Japan, I believe, and done some swaps and other technical and mechanical things that helped to prop up the yen a little bit, but ultimately, you know, like most fiat currencies, I think that the yen is knocking on heaven's door, in order to use a Bob Dylan song there, of course, Guns N' Roses, with a cover. Yeah, all fiat currencies going to go to zero eventually. They always have done. They always will do. Sorry, it sounds like I'm picking on the yen, but that's how it is. The US dollar is likely going to be the same. The Great British Pound likely going to go the same way. Pesos, won, yen, renminbi, yeah, you name it. If it's a fiat currency, it will likely go to zero. Which is also why we say here on the Contrarian Capitalist, which is why it's important to have that exposure to gold. It's important to have that exposure to silver, in my opinion, because if you have it in your hand, so we're not talking paper silver, we're talking the physical silver itself, physical gold, other commodities as well. If you've got it in your hand, you can touch it, you can look at it. It does get you out of the system, and you never know when you're going to need it. Well, we have seen our friends over at the Sound Money Report put something on Substack the other day to do with, I think it was Austria, starting to ask a bit more questions about bullion, about wanting proof of how much the bullion was purchased for, etc., etc. Now, I don't know where that's going to lead us to, but again, these are sorts of questions that you could argue they've got a right to ask, but from a libertarian point of view, I'm a bit concerned that they're asking such questions in the first place. So always just bear that in mind when you're looking at adding to your bullion, or you're looking to get into bullion for the first time. You have to either take delivery of it, which is useful, or put it in a third-party storage with a bullion dealer, for example, or in a, dare I say, random place. You know what I mean? A random storage unit somewhere where you've got access to. Do not put it with a bank. Not a good idea, because if the banks go Pete Tong, so that's Cockney rhyming slang for wrong. If the banks go Pete Tong, then yeah, you're going to have a lock-in, and not a good kind. And you don't want that. You do not want to be the other side of a bail-in, as I should have said. Let's see what happens. Let's see what happens moving forward. Nothing else of note. Just have a quick look around the headlines. Usual issues between apparently Israel and Palestine. Nothing new there. I see the LA Lakers are being sold in a record 12.5 billion deal. So again, that's inflation in itself. I know the Seattle Seahawks are being sold for nearly 10 billion. And again, you look at some people that have bought franchises over the years, at a lot lower price. I haven't done any analysis to take in the cost of inflation there as well, but again, just an arguable proof of a bit of inflation there, and that's really all I can see. Of course, thoughts and prayers to any one that's been affected by earthquake over there in Colombia. I know we do have some Colombian listeners to the Contrarian Capitalist, so peace and prayers out to yourselves as well. Yeah, I wouldn't. I have been in an earthquake before, admittedly not that strong. It's not a very pleasant experience, to say the least. So yes, I wouldn't recommend you in one either. If you ever find yourself in an earthquake zone, though, please do read the information pamphlets that you get given. I know in Mexico, where I normally am based, there's a lot of things that can happen. An earthquake is one of them. It's important you actually know what happens, because if it is a severe one and you do have an alarm that goes off, like they do in Mexico, you have 1 minute to get to a safe place. or do what you need to do. So again, if you're ever in an earthquake zone, do take heed of all of the warnings that you get given about what to do in an earthquake. But peace out to anyone that's been affected by that earthquake, and anyone listening in from Colombia. I think we'll leave it there today. If you are in northern Spain or you're in the UK, by the time this video goes out, or by the time you listen to it, if you're not listening to it live, we would have had a solar eclipse. So I'm going to go off and I'm going to look at that. Obviously, I'm going to wear my sunglasses and so forth. I think the last one we had was 1999 here in the UK. I believe the next one is something like 2090, 2090. So, when in Rome, so to speak. So I'm going to go off and look at that. I'll be back with the commodity wrap on Friday. Tom Bradshaw and myself, we were meant to record the chart of the month on Thursday the 13th. That's now not happening. We're going to record on Saturday the 15th in the morning here in the UK. So chart of the month will be with you on Saturday. That will mean that the market wrap will be with you at some point on Sunday this coming week. I've also will write an update for those that are watching for the first time, or you're not overly familiar with myself, the Contrarian Capitalist. Normally, I'm based in Mexico. Back here in the UK at the moment, unfortunately, dealing with a lot of other business issues to do with property or real estate. If you're listening from the US, Canada, and so forth, I'm going to provide a little bit of an update on that. I'll write an update for Monday. And the reason I say that is that I'm aware in the last few months, because I've been dealing with all of that other business stuff, I am aware that the content on the Contrarian Capitalist has been less frequent than it normally is. And again, there are extenuating circumstances. I find it important to at least be honest and update every single one of you, because I think that building that rapport, having that trust, having that honesty, I think is a very important thing. So I'll write an update. I'll get that out on Monday. And again, that should help to put things into perspective. In short, it's going to drag on for a little while longer. There are some other ramifications, but hopefully by the time I get back to Mexico in the middle of September, there'll be some semblance of normality coming back to the Contrarian Catalyst in terms of the amount of content coming out. Same goes for podcasts as well. They've been a bit light recently. Next podcast guest is going to be, well, actually Tom Bradshaw. We're recording the video as well as the audio on Saturday. So yes, do watch out for that on Monday. And if you are yet to become a subscriber to the Contrarian Capitalist, please do so. contrariancapitalist.substack.com. Do become a free subscriber, give the channel a go, and then when you're ready, do head over and become a paid subscriber. I believe it is, so I always get my pounds and my dollars mixed up. I believe it works out at $110 for the year US. I believe that's the case. It's about £80 UK. So yes, that's where we're at. For that, you do get early access to the podcast when they're released. You do get any bonus podcasts that I do for paid subscribers. You also get behind the paywall access to the weekly commodity wrap and the weekly market wrap as well. And as I said, that content level will be going back up again, hopefully by the end of September, start of October of this year. You can also have the option to become a founding member. That is a one-off lifetime payment. I think it's about $350, give or take. You pay once, you're a Contrarian Capitalist for life. And I do plan on running this channel for a very, very long time. So if you do go down that route, the chances are it's going to be well worth it moving forwards. If you run a Substack channel yourself, please do also mention it to your tax accountant or your accountant, because if you get a subscription to the Contrarian Capitalist, depending on where you are in the world, of course, you might find that a paid subscription can be considered a tax deductible write-off. But again, do speak to your accountant, speak to your power team about that as well. Right, I'm going to sign off. I'm going to do the graphics for this. I'm going to go and look at that solar eclipse, which is happening in about 50 minutes. Have a fantastic week. Thank you for listening. Stay safe out there, and I'll be back with that commodity wrap on Friday. Take care.